I want to bring in Tom White, senior options contributor and co-host of Fast Market, to help set up the action today. So investors taking some chips off the table yesterday. It looks like some of that will continue today. What's your overall take on this, Tom?
Well, I think you've got to take it a little bit of perspective here. We're still only 2% below record highs that we hit just over a week ago in the SPX and the NDX and the Dow Industrials. So nobody needs to panic out there. But one of the concerning things for me is the breadth that we've seen. We all know that this market's really concentrated. The S&P 500, 40% of it is built into the top 10 names. So there's concentration risk out there. Maybe some profit taking after the run that we've had. The S&P 500 is still up 15% so far this year, so it's on a good run. November's historically been a strong month, but we've got some headwinds in the markets at this point. Is this, what investors are kind of looking at, that this AI bubble, which, you don't know what inning we're in until we see maybe a pullback in AI infrastructure build-out spend. Those CapEx numbers that these companies and hyperscalers are throwing out there are leading the markets. But you look at other segments within the overall market, Diane, you look at small caps have rolled over the last couple of sessions here, catching a bid here today. The S&P 500 equal weights lagging a little bit. The consumer staples, some of the other sectors within the overall market are not performing as well as the overall market, but the overall market's getting led by a handful of names. So that concentration risk here, I don't think, you see pullbacks in Palantir. You're seeing a 2.5% pullback in AMD today. Well, maybe it is people just taking some profits. These stocks have had great runs over the last 12 months to 2 years. So, maybe being a little bit more aware of what's going on when valuations get this elevated.
That's a great point. And potentially, as you mentioned with AMD, maybe investors are just taking some chips off the table because, look, it was a strong quarter. What are some of your takeaways with its results?
Well, kind of just like I said, the bar was really high in AMD going into this report. All those partnerships that they've announced recently, the partnership with NVIDIA, and then on the other side, you've got or AMD or OpenAI, the partnership that they signed there, Oracle, the partnership they've got there, the U.S. government taking maybe a stake in this company, or NVIDIA taking a stake in this company. I mean, there's so many partnerships out there that the bar was really high going into this report, right? You look at the valuations. It's really elevated at this point. When you beat on EPS, $1.20 versus $1.17. You beat on revenue. You raise guidance, the midpoint of guidance up to $9.6 billion moving forward. It seems like a pretty rosy outlook here. But then you start talking about the margins, which maybe didn't meet the street's expectations here. So I think you've got to take all that into context. You look at the gaming division, $1.3 billion. They were looking for $1.1 billion. That's a positive. That's a big turnaround. You look at the client segment, laptops, $2.9 billion versus expectations of $2.6 billion. So that was above expectations. And then you look at the data center revenue, which was up over 22% to $4.3 billion. That's a positive, right? But at the same time, you've got to be cognizant of valuations at this point, especially when, maybe people are just taking profits, looking at those valuations and thinking, oh, okay, maybe it's not a bad idea to lighten the load. And then don't forget, Diane, Amazon sold all their shares, over 822,000 over as of September 30th. They had rid themselves of all of AMD's shares that they had bought earlier in the first quarter.
Let's talk a little bit about another mover. And actually, really quickly, just to add on to what you're saying about AMD, it looks like there is still conviction, at least when it comes to the sell side, because I'm seeing, several analysts boost their price target on AMD. So Rosenblatt boosting it to 300, Stifel, and they've got a buy on it. Stifel maintaining their buy, and they've raised their price target to 280 on AMD. Let's talk ANET. That one is under heavy pressure in the pre-market. To me, this looks like maybe this is potentially about the guidance. What are some of your takeaways here?
Yeah, definitely about the guidance. When you've got to stock up nearly 40% on the year going into a report, and they give lighter than expected guidance and maybe what the whisper street numbers were on the street. That's a concern. But you look at earnings rose 25% to 75 cents. Revenue climbed 27% to $2.308 billion. So those were some positives. They see Q4 revenue about $2.3 to $2.4 billion. That's about the consensus, $2.33 billion. But gross margins actually expanded up to 62 to 63%. And if you take a look at it, in September, on their Analyst Day, they forecast 20% revenue growth for fiscal 2026 up to $10.85 billion. So though they've already kind of given the street what they wanted at that point, so maybe a little bit of profit taking here in Arista Networks. They did just come out with a new Ethernet switch. Their biggest customers, Microsoft, Meta Platforms, they're not pulling back on any spending anytime soon. But this goes back into that theory, Diane, that you can beat expectations, you can maybe even raise guidance, and they still might hit your stock just because of the rally that we've seen and the moves that we've already seen, especially over the last several months.
Okay, great perspective there because, as you compare and contrast, for instance, AMD, it's had a big run. So, a pullback may be just to take some profits here, whereas ANET, a little bit of a different story there. Thank you, Tom. That is Tom White, co-host of Fast Market and senior options contributor.